Welcome to this episode of ACG's Growth TV. I'm Katie Mulligan, and I'm joined today by Vince Grande, Managing Director with Antares Capital, and his colleague Justin Small, a Senior Vice President with the firm. They are joining me today to talk about financial services. Justin, we'll go to you first. We've had a lot of recent challenges in the market between supply chain disruption, rising interest rates, labor shortages. How is this affecting how you're thinking about opportunities at Antares and how you're thinking about risk?
Yeah, no, I'd be happy to take that one. We have the advantage of having a large portfolio of over 450 platforms, which is primarily comprised of business services, healthcare, and companies that are naturally more resilient to cycles and less exposure to labor shortages. So we have the benefit of having time to have built that portfolio, and it performs very well. I think interest rate environment is obviously a topic that everyone's focused on right now. And I think, with this first interest rate increase, these companies will perform perfectly fine. Depending on how much interest rates go up over the next year, we'll see how that plays out, to be honest. But our underwriting standards have always been recurring revenue businesses, highly diversified, elements of those businesses that make the cyclical impacts much less.
Mm-hmm. And then Vince, looking at financial services in particular, from a lender's perspective, what does Antares like about that sector? And are there specific niches that you're drawn to right now?
Yeah, and I'll hit on two segments within financial services that we like: insurance and wealth management. And they seem that they have similar attributes in the sense that, one, they're highly recurring. They have a highly recurring revenue base. They seem to be, somewhat resistant to cycles. They're high free cash flow and highly diversified from a customer perspective. So it hits a number of the key themes that we like as a lender.
Mm-hmm. And what do you foresee in terms of deal activity within these niche spaces, in the coming years?
Yeah, look, both of those segments are highly fragmented. Both the insurance and the wealth management segments are highly fragmented. I think on the insurance side, what I'd say is while that M&A has been going on for years, I still think that there's a lot of room, a lot of upside to be had there. On the wealth management side, it's earlier innings. I think that it's dating, looking back and comparing it to insurance. I'd say it's call it 5 to 7 years behind that, and I think there's a lot of room to be had there as well.
And Justin, over the past couple years in particular, we've really seen this push of businesses and firms of all types to harness technology in new ways. So can you talk about how Antares is using tech either to source deals or manage investments?
Yeah, I'll take it back to the portfolio. We have a very large, diverse portfolio across multiple industries, and we had the opportunity to redo our technology 6 years ago. So we are able to harness that data and make informed decisions on new opportunities by looking at the portfolio. I think we're very much focused on technology and candidly the data we get from our portfolio accounts to help manage risk in the future.
Mm-hmm. And Vince, I'll end with this question to you, which is, we're in this really evolving market. How has that affected how Antares is thinking about its own product mix or what you offer to clients?
Yeah, one thing that I'll say to that, it's a great question because the market is constantly evolving. And I think about our unitranche product set, which we were the founders of that product, and ultimately, as the market shifted to more unitranches throughout the last few years, we've been moving alongside that. So our portfolio has been shifting to more unitranches to address our clients' needs.
All right, Justin, Vince, thank you for joining me on GrowthTV.
Thanks for having us.
I'm Katie Mulligan for GrowthTV. Thanks for watching.